Alrighty, this is going to be the last of our cash flows from operating activities direct method videos. So we had done the cash flows from cash received from customers, cash paid for inventory or to suppliers. Now we need to go back to the income statement and see what else is left. Next line. And notice I'm skipping over gross profit because that is a subtotal. It's just a subtotal. We only convert income statement accounts that are reported, account balances that are reported, to cash paid or cash received for that particular item, not the subtotals. So the next expense account listed is depreciation expense, and we see that depreciation expense for 2018 was $35,000. Now, here's the unique thing about depreciation expense. You may remember the adjusting entry is debit depreciation expense, credit accumulated depreciation. So it's an expense on the income statement, but no cash is paid at all for depreciation. So this is a non-cash expense. Others would be amortization expense, the allowance for doubtful accounts, the bad debt expense. If we had that separately in accounts receivable, then those are all non-cash expenses. So under the direct method, we do not even list depreciation because we don't pay cash for depreciation. So that's not even going to be a line item on the cash flows from operating activities method, activities under the direct method. So let's move on to the next line. The next line is other operating expenses. This could be payroll expense, it could be rent expense, it could be insurance expense. So any of those items that we've seen on the multi-step income statement before, all lumped together in one in this particular exercise. So that amount is $208,000. And just like we did with the cash received from customers and cash paid for inventory, for cash paid for operating expenses, we will start with the expense amount, and I'm going to abbreviate this. And again, that amount was I've forgotten, I have to look back, $208,000. Now, as I said before, that could be related to insurance. So we might have to look at the unexpired insurance account to adjust for to get to the cash effects. Excuse me while I clean this up a bit because it will confuse us otherwise. It could be rent expense. So we might have to look at prepaid rent. Or it could be wages payable or interest payable. And in that case, we would look at, or wages expense, interest expense, we would look at the related liability account. But in this case, since it's a whole bunch of different liabilities, we're going to be looking at the only other liability account that's listed on the balance sheet, on the comparative balance sheet, and that is accrued expenses payable. So accrued expenses payable might include the wages payable, or the income taxes payable, or the interest payable. But it is a liability account rather than a prepaid. And we'll talk about the adjustment for prepaids if that were on here. All right, so the accrued expenses payable decreased by $3,000. So if it went down And accrued expenses payable shows expenses that have built up but have not yet been paid. So if the account balance went down during the year, that means that the expenses that were accrued and reported on the income statement were less than the cash we actually paid on those liabilities. So under the direct method then, we are going to, starting with that operating expenses of $208,000, we are going to add that $3,000 decrease in accrued expenses payable. Now, if this had been a prepaid, if the prepaid account decreases, that means we expensed more out of it than we prepaid during the period. So a decrease in a prepaid would be added to the operating expense. So the decrease in accrued expenses payable is going to be added, but I think I said that incorrectly, but a decrease in a prepaid account would mean that a decrease in a prepaid would mean that we expensed more than we paid. So I did say that incorrectly. So the or on this, if would be that we would subtract a decrease in a prepaid rent, prepaid insurance, or we would add an increase in a prepaid, or we would subtract an increase in an accrued payable. So that's a whole lot of ors on that operating expense because it is representative of a bunch of different expenses. Like I said, insurance, rent, wages, interest, taxes, and some of those are come from asset accounts, some of them come from expense accounts. So the amount we actually wound up paying for these operating expenses is the $208,000 plus the $3,000 or $211,000. And again, since we paid, that's going to be a negative in the cash flows from operating activities section. Now, again, because I kind of got distracted there a little bit, let's look at this accrued expenses payable as a T account, like we did with the others. So again, it's a liability, so the beginning balance is on the credit side. The accrued expenses payable account started out at $17,000 credit, and at the end of the period, it's got a balance of $14,000 credit. Now, that's two pieces, and we've got four parts of this, so we need to fill in the other. The accrued expenses payable account would be increased by the accrued expenses. That would be increased by the accrued expenses, and we know that the accrued expenses from the income statement was $208,000. So it would be decreased by what we paid, the liabilities that we paid. So again, let's just do our math here. We got $17,000 beginning plus $208,000 that were accrued expenses. That's $225,000, and then if we subtract the ending balance of $14,000, then once again we paid $211,000, and that is the amount that we want to report on the cash flow statement. And as I said before, if the accrued expenses payable account had increased, then we would have paid less than we expensed, so we would subtract the increase in the accrued expenses payable account. All right, the final thing that we need to do here in about a minute is we need to summarize the net effect of this operating activities cash flow. Now, this section can be titled Net Cash Provided or used by operating activities. If the positive amounts are greater than the negative amounts, then we've got cash provided by operating activities. If the negative amounts are greater than the positive amounts, then we've got cash used by operating activities. So let's just do the math real quick. 367 minus 119 minus 211. Our net cash is a positive amount of $37,000. So that is net cash provided by operating activities. Again, if the negatives had been 370, then we would have net cash used by operating activities, a negative of 3,000. But in this case, it's a positive, so it's net cash provided by operating activities. All right, so that is our direct method operating activities section. Next, we're going to take a look at the indirect method, because under the direct method, if we use this method, GAAP, Generally Accepted Accounting Principles, requires that we must provide supplementary information that explains the change from net income, or reconciles net income from the income statement to cash provided by operating activities, and that is the indirect method.